Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. So I'm at marketchameleon.com checking out their unusual options volume page, and I have sorted it by volume, and you can see quite a bit of massive options trading going on today. XLE in the energy sector, GameStop up really big on a short squeeze, Ford and Intel, couple blue chips. And then there is Virgin Galactic, which has been a popular stock over the last year. The Branson company that is going to focus on commercial space travel and research and a few other things. So definitely in the space industry, which is certainly an up and coming sort of thing going on. 4 times the regular volume, over 500,000 contracts, 86% calls, which tends to be bullish. So what's going on there? Well, if you've followed any of the ARK ETFs, they're very popular ETFs these days, investing in a lot of the new tech and new innovation. They invest in things like Tesla and stuff like that. So very popular. And today ARK announced they're going to have an ARK Space ETF. So a lot of money being poured into these space companies based on their addition to ARK, which again has been very popular amongst investors over the last year or so. So Virgin getting a bump based on that. If we look at some of the trades now, this is it's a new enough stock, that volatile enough stock that over 113% implied volatility. You're not going to see a whole lot of institutional trading in here. There are a few over 1,000 lot trades. The biggest one being a 4,000 lot January 22. So a year from now, the stock was at 32 at the time. Someone bought the 50 calls 4,000 times for quite a bit of premium, 780. Looks to be opening trade. Looks to be a purchase because it's closer to the ask price. So $3 million spent on premium, and this thing would need to go to over 58 roughly at expiration to be worth something. So obviously quite the bullish trade on Virgin here. Again, it could be something else, but this isn't part of a spread that we can see. So unless the leg was done at a different time, this looks like a very bullish trade. So that's a lot of money to spend. Of course, you could do something like a vertical spread or something else, or obviously a shorter term trade if you're bullish. But just taking a look at it, you can see what's happened here. Back earlier in the year, we saw a huge spike, and then we had the pandemic, and it dropped back down to 9. And this is SPCE here, just reiterating. You can see we had another move up to July, up till about 25. It's kind of been going sideways with some volatility, spiked again, back down, and now this big spike and on this ARK Space news, which is probably likely to hold for a bit if it's going to be added to that index. That is the sort of thing that tends to have a longer term bullish impact, at least until it's added to the index. So up to about 33. Looking at the options here, so Jan 22, still over a year, just about a year till expiration. So this is a long-term option. That's one of the reasons why they're expensive. You can see the 50 calls over 4,000 traded most in that one block. Over, call it, they paid $780. It's already worth over around $8 to buy that call. I mean, it'd be simple as just buying a straight call to do that sort of trade. However, maybe you want to cheapen it a little bit, so maybe you do something like the 50-60 call spread, and that whole thing would cost you about $2, a little over $2. So that, with an upside of around $8. So that might be a way to cheapen it if you're bullish over the longer term without having to spend so much money. So sort of thing I talk about regularly in my services. Option Floor Trader Pro buys calls and puts, so that is one that you could check out if you're interested in this sort of trading.